Good evening, Ira Epstein, and here we are with your financial market wrap-up for this Monday, the 4th of November, 2024, about 6:35 p.m. Central Time. Got to start out and just tell you straight up front, whatever you're going to do in the futures tomorrow, in the financial arena part of it, which are the bonds, the stock indices, the currencies, the metal markets, and interest rates, understand what you're doing. You're betting on who's going to be the president potentially. Will there or won't there be a challenged election? Will you even know who's the president overnight? And what's the reaction to it going to be by the financial markets? Now, if you're smart enough to guess all that right, congratulations. The smarter money, and I've learned this over my nearly 6 decades in this game. Yeah, it's over 5 decades for me. I became a broker in '69, a registered broker, to give you an idea. So for me, I've seen this happen before, and I've learned that the smart guys like me that are still around don't have to take those risks. You wait, you take your shots in the market a different way. I like to trade the trend as the trend develops. I like to try to hope to catch a trend. We just did that in gold last week and nailed the market for very large amounts. I still have ETF people in it, but I've taken the people out of the futures because of dollar risk. But in all cases, including ETFs, I've cut the positions down on that good rally that we had to the point where they can hold on there. But understand the difference. The max you get if you play normal ETFs is 50% leverage. I say normal because you can get double, triple ETFs, bullish, bearish. I want no part of that. They get thinner and thinner the way you go that way. The second thing is in the futures. Now they're raising margins, some of the clearing firms, so be aware. That's a smart thing on their part. They'll drop them right back as soon as things go on the right way. Right means that the market's not showing craziness via the election. It's very possible it'll all be off with the raised margins before the Fed on Thursday. So those are the things you got to watch there. As for market data tomorrow, you get Redbook Group with retail sales. It's been running about 5% increase overall. S&P Global will do their final, and the word is final, so it's going to go against the prelim service sector manager PMI. That comes out at 845. We get the ISM coming out with their U.S. service sector indices for October, and that's going to come out at 9 o'clock, and people will be watching that. API data will come out at 3:30 in the afternoon, and you know that everybody's going to be watching TV tomorrow trying to figure out how do they go about whatever they're going to do. Obviously, the analysts today, the smart guys were saying, whoever wins in a matter of days, the market will go back to what it's doing. I am in that camp, fully in that camp. The people that are saying, well, today's break was because Harris did better over Iowa. Really? I don't know that that's true or not. It's a good guess, but it's a guess. Nobody knows. People think they know what a Trump win or versus a Harris win. Okay, I think the market's giving you some ideas, but I'm not completely convinced. I'll let it all develop because it's more than just the presidency. It's also going to be the check and balance that comes out of the Senate race, and do the Republicans hold on there, and does the House stay Democratic controlled? I want a split Congress, a control on Harris and or Trump. I don't care which one, I want controls on it. We know they can do their presidential orders. We've seen that over the past 8 years. One go on, the other taking them off. You know, we've seen all that. But getting the laws of the land changed, not the easiest thing, and much harder if you have a split Congress. And that's good for business, by the way. So that's how I'm looking at it. Have I changed my opinion that we will get a rally into year end? Not even remotely. Could I be wrong on that? Very. Could I get egg on my face? Yeah. Could I have holes punched in? Well, I'm the original Swiss cheese guy. You know, I'm the only guy out here that I see all the time admitting that they have made mistakes, they've made bad trades. I watch videos from so many people, and it's amazing how many make money all the time. You know, why are they doing these if that's the case? Why aren't they just quiet? Well, because they're so gracious that they're trying to show you that if you give them 10,000, you will be a millionaire in no time. We get people on YouTube, they're always adding to the pages. I made $190,000 this week, and if you go to Miss whatever her name is, you'll get that. I pray to God you don't fall into that. As soon as I see them, I do my best to take them off. Right YouTube, that stuff should not be allowed. I report it, they do nothing about it. Pretty simple. All right. So in the S&P, I wouldn't be surprised, and I've said that, if the market wanted to retrace back closer to the 18-day average of closes or the 18-week. In this case, it's a weekly closing chart, and that would be 56.55, about 90 points lower. I don't know if it can be hit or not. I know the market bias, the way that I teach charting in my courses, is when the market is over the 18-week average, you have a bullish bias, and on pullback, that's often the support area. You need not believe me, but you can't deny what the chart's doing. And if you don't believe that, well, then you're blind. When you take a look at the D-Mini S&P index, you've got a pattern here that has been breaking down. The pattern is now one of lower highs, lower lows. I could even move that red arrow now. I'm just seeing it over there. That's where it really belonged. I caught it over here. I missed it on that chart. And that is in the bear camp. A potential moving average of support is 56.77. It sort of ties in with what we saw in that other chart. I'm not saying it has to go there. That's a potential support. Where's the Bollinger Band? Right here. Why do I look at Bollinger Bands? Because markets like to go to them and fight battles against them. And how you use them, you've got to learn the technique. On my website, under courses, there's a full course on using Bollinger Bands with slow stochastics. What you have in this market right now is an oversold condition where the market is trying to grab onto the Bollinger Band and push it lower. If it can do that for a while, you might develop what's called an embedded reading, when the blue and red line are going sideways under 20. You generally don't do that. You generally get down to that and fight a battle that's oversold and try to recover, because overall the market has been bullish, not bearish. So it's much easier to develop the bullish embedded readings in a market that is doing that. And you know that it's more bullish than bearish. How many seasonal new all-time highs have you made just this year? Unbelievable. What, 50 of them, something like that in the S&P? When you come to the NASDAQ, you're coming into major support area. You're down to the lower Bollinger Band and trying to get that area with the 19,966 level, the 100-week average of closes. I think pros are taking shorts off, not adding them there. I think that the Dow keeps hitting like the others, this average. It could drop to the 100-day. It need not. It's already oversold. So you've had the correction. So the markets that were running up into mid-October gave the correction. I timed my vacation. I expected this. Do you remember the special reports they did with the timing of the markets right in front of the election, and then what happens at the election, and then the post? Those were the reports. And I timed when I wanted to take some time off, because I want to be here for the next series of trades, which are right in front of us. So patiently, I'm waiting to see, let this run its course. The Russell, all it did is rally back to the resistance at the 18-day average. The trend has been down, the bias down, but you are oversold. I think it had its best shot of hitting these numbers back here. But again, I'm going to be very clear. I have no idea how these markets will react when the mid-evening results come in and we start getting an idea where the electoral college votes are. I'm not worried about the mass vote. I want to see what the electoral college looks like, and obviously the swing states as they come in. That'll give us a great idea of where this is all going. In the 10-year note, what you're doing is you're flirting, but have not lost your embedded reading. And as I said, until it's lost, the pros will be selling. But this is different than oversold. This is a locked-in downtrend, but with the election, who knows what it will do. From my cup of tea, still bearish, but through the election, I seriously doubt it. In the dollar index, got what I was expecting. If you take a look at this market right through here, this is what I keep trying to get you to understand. Here's where the market lost its embedded reading. You got a 76 reading. From that point, I'm looking for an eventual test of the 18-day average. Look how crazy it went as soon as it hit it. That was November 1st, Friday. I don't care if it sinks back now. You can see traders were seeing what I was seeing. That was your first one, but you're not in a trend, not as I see it. In the euro, you're not in a trend. You have a rally with a lower low and a higher high. Again, this is a market that lost its bearish embedded reading, rallied up to, and we're finally getting a little bit of a rally away from that 18-day. Will it hold? I have my doubts. Not because of the chart action, because of the election. In the British pound, well, now that Ms. Reeves, the chancellor, gave the Brits their idea on a budget and all the borrowing that's got to happen, she's really thrown a wrench into what the Bank of England might do. We have a meeting coming up where they're widely expected to still go with a 25 basis point cut. However, from there, because of how Ms. Reeves has set the amount of monies that it's needed to get things done in the UK, they have to borrow. Borrowing's inflationary. Inflationary doesn't mean lower interest rates. Generally, the way you contain inflation is raising interest rates. So you're getting to an interesting argument here, and you want to keep yourself aware of that. When we come to Bitcoin, this is November. It's off the board. No, it's not. It's November. October was the one that's off the board. All right, I changed them. I thought you'd come back to the 18-day average as the market lost its embedded reading. You've done it, and I think you're just going to sit tight. Now in Brent, getting your bounce, getting overbought, I seriously doubt the market's going to easily get through here. And here's the dilemma that OPEC has. If OPEC wants to grab market share back, how does it do it except via price? And if they're going to do that, they have to put oil onto the market. If they put oil onto the market, it becomes a price war, and they try to drive the lower cost producers out, or say, hey, it's not economically feasible for the U.S. to just keep hitting record production, blah, 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 whatever they want to say. That isn't in itself bullish. So I think you got to bounce in a market that is looking at the election, looking at the Iran situation, where Iran has made a lot of noise about attacking Israel. I think Iran will wait for the election to get through and then judge who they think might be in the seat and what the reaction to them will be. Trump would be a tougher guy in that House for Iran than Harris. It's really that simple. I think they want to see what that does. In WTI, it's the same type of chart. Don't try to read more into it. Heating oil, actually the same type of chart right now and overbought. Nat gas, this is the bounce I've been hoping for. I want it to carry more. I am bearish in that market, looking for opportunities to the downside as the market may offer them as time goes on. I will cover that and a lot more in my morning videos, and this is where you really want to get the information. Because what I do in these, I cover 40 charts. They look this way. There's obviously more lines on them. You get to understand them like that. I go over them every day. One for futures, one every day for the ETFs and stocks. In the ETFs and stocks, I'm always rotating what I'm doing. And in the futures, there's the 40 big futures markets. You know, there's no reason to rotate there. You're just changing the contract months. My special reports, free access. You don't pay for them the way that many of you have to, as I put them out. And I will put some out right after the election. Why do it in front of it? The combo package for all this, we offer a special pricing, a 30-day special, so you can see how they are. You go in, you don't like it, you go into your member login, you can cancel, you can extend, it automatically rolls, you can modify it. Get my written commentaries with it, which I think you'll find very important. I lead you to areas in those, so I think it's crucial that you see that. Just go to iraepstein.com research. Just go to iraepstein.com, look on the right. You will see the word research. You can move your cursor up here at any point and see what that's about as well, because when you do, there'll be an icon. Give it a click. With that, I'm Ira Epstein. I hope you have a great trading day on Tuesday, if that's what you're going to do, and I will catch up with you again Tuesday evening. You take care.